Next up, we have Kico Amata to take us through project implementation. Kico joins us from Deloitte, where he is program lead for IFRS 17 nationally and also has internationally a leadership role. Thank you.
Thanks. Hello. Morning, everyone. Okay, so what I like to do is, even before I start, because I had in the past lots of comments about my name and my accent. So I'm not Japanese. So I was told in a few interviews, Kico Amata-san, I'm definitely not Japanese. So I'm actually, you will be confused by accent name. I'm Italian. My hands will give you away. So I've been a little bit around Europe doing finance transformation. I've been involved in financial service, insurance the last 10 years. And I came to this beautiful country around 4 years ago. So I'm leading the IFRS 17. My background is mainly finance transformation and finance technology. So I will take you to the implementation aspect, but obviously with a big flavor on system and data. Now, what I like to do in the next 45 minutes, or maybe a little bit less, is take you on a journey with me on what is the implementation timeline. Now, when I look at timeline, I was thinking, I'm not going to talk about time, how long it takes for this, how long it takes for that. I would say it's useless. And to be honest, every single organization, depending on the size of the organization, depending where you are in your journey internally, even before IFRS 17, meaning from a system point of view, ecosystem, from a strategy point of view, from data components, if you are obviously GI, if you are life insurance, if you are health insurance, if you do PAA, if you do VFA, it completely changes the game. So talking about timeline is very indicative. Before even going on the timeline, actually, this is a very interesting slide. We did the survey last year. It's a global survey, so it's in Australia only. And what came out is basically we ask the insurers, we ask our clients, how long, where you are with IFRS 17, what is the impact for you? And you will see that 87% say, well, I need to upgrade my systems. I need to do something in my ecosystem, my data. Otherwise, I cannot cope with the requirements, with the level of data, granularity of data that IFRS 17 requires. In terms of timeline, or I would say implementation phases, so I came up with these 5 steps. So wherever you are in your journey, wherever is the size of your organization, whatever you focus on, these steps is something you need to go through anyway in terms of implementation. Impact assessment, feasibility, readiness, delivery, and then long way for all of us is a run, which is basically post-implementation. I'm not really focusing on impact assessment, only because I will expect in Australia, and where we are in terms of timeline, that every organization has done an impact assessment of what it means for you, for your balance sheet, for your P&L, for your disclosure, IFRS 17. Can I have a confirmation of what I'm saying? Is anyone hasn't done no impact assessment in the room? Is it not a shame? So I get it, everyone has done it. Yeah? Silence. Okay. So what I'm going to do is I go straight into feasibility. So making an assumption that you had your accounting firm that came, did an impact assessment, say, okay, this is what the impact for me, this is what the balance sheet, this is the accounting policy, this is what the papers, this is the kind of framework, this application needs to be done. Everything is kind of clear, even if high level. Then the next question is, okay, I got this information, this is what it means for my reporting, what I'm going to do. Now, based on the previous slide, in terms of our survey, 90% of our clients, I will say, when I say that our clients is, as Kylie was saying, I sit also globally in IFRS 17 campaign, so I have a pulse of what's happening actually globally in terms of trend. And I could say easily that most of our clients, I would say very close to 90%, they decide to go for a subledger. So in order to be able to taking through the data from your passes, from your source systems, all the way to the reporting to the ledger, most of our clients came up with a sub-ledger solution. Or the decision was on a board level to integrate with the new sub-ledger. If that is the assumption, one of the first things you need to do is look around and say, well, what is in the market? So the first thing you will do, this slide is a little bit complex because it is a kind of really, we call fit gap, where you do a real proper analysis, what you have today with other possible vendors, but you don't need to go in that kind of detail. A simple vendor selection is what you need to do as a minimum. So going to the vendors, asking, understanding what is in the market, compare the different vendors, and then decide which one could fit your organization depending on where you are in your journey. So again, depending on the size, depending where you are, different solutions fit your organization. But definitely this is one of the first things that you do after your impact assessment. So in this slide, and if I have people who technology are not very familiar, if I understand it, anyone can understand. So I will make sure that I go step by step to make it a little bit clearer if it's not. So this is what I call a kind of solution architecture. So it's part of your readiness. If you go from left to right view, on your left you go all your passes or your source systems. There is a kind of lengthy area because all your source system, your claim system, your expenses will have a different data in different format. So the first thing you need to do to pass through the information is to have a landing area, we call it, where basically you transform your data to unify the data in a certain format. Then the next step is not necessarily one after the other, but the next 2-3 steps are the crucial ones. You got the actuaries that they do the modeling, the evaluation. If you are life, you probably use Profit. If you are in GI or healthcare, you probably use Excel or other solutions, smaller solution. But in reality, you need an actuarial component where all the evaluation is done or your modeling is done, CSM probably, risk adjustment, and so on. Then it comes the component which is really the core of IFRS 17. So the two other components there we call calculation engine, and the hub is basically where you need to take your actuarial data, which are still not in debit credit, put in a transactional level on debit credit through a calculation layer, which is the first one I'm showing there, and then in a kind of hub. So you store all this data in a hub, in a kind of storage place that creates a subledger. In real term, because it's a counting debit credit system where you have a transactional level, we got the full control, we got your typical information that will feed your general ledger, a more aggregated level. Anyone disagree with me? Okay. Next level is less relevant to IFRS 17 because it's your normal subledger in terms of fixed assets, account payable, account receivable, everyone will have it. You got your statutory ledger, the general ledger, obviously. You might have a consolidation tool, or you maybe do the consolidation in the general ledger. So a typical consolidation tools that are in the market, I'm not going to name them. You do your planning, your budgeting, your forecasting, which, interesting enough, is not the core of IFRS 17, but we are seeing in the market lots of, in Europe and Asia, more and more companies that are starting thinking, yes, okay, I need to make sure that my data are ready for IFRS 17 in my ledger and my reporting, but actually planning and forecasting in terms of strategy, what you need afterwards, it becomes very crucial. So there is a rethinking of this component in terms of performance in your organization. And then the last bit is the reporting layer. So it's actually crucial, but it's what is your output, how you're going to analyze your data. And then if you want to go a little bit a step further, there is the analytics. So you can have a dashboard, you can have AI, you can have all the, the fancy stuff that happen in the market. So what I'm trying to say in this slide is, if the assumption is like majority of our clients, you need the subledger, this is what you're looking at, is that the middle part between the calculation engine and Counting Hub that they allow you to treat the data based on whatever is the methodology you're going to use. I pause there because rather than having all questions at the end, if there is any burning question, please ask. Okay? I'm happy to answer any question at any point in time. So this is a more complex view. And the only reason I'm putting this view is because I'm going to decompose. I can see people laugh and say, what is this? It's exactly the same thing. Your data from the left going to the right in your reporting. But it's a complex view because I'm going to decompose these components one by one. Yeah, I will do very quickly because I'm not here to give a lecture of systems. So just to give you an idea. So what you see here is I talk about application engine. So the engine I was talking before, the calculation engine. So we have different vendors in the market. And again, I'm not going to go in detail to tell you about what is good, what is bad, what does one for the other. I just want to tell you that one of the big components is the calculation engine. You can have in isolation rather than have the full subledger is one of the options you can go, depending on what your ecosystem is today. You can take only the layer, and these are some of the players, the big vendors, the big players in the market. Are not the only ones. You probably will see straight away what is the big SAP, what is Oracle, the big players in the market. The reason why I didn't put them is because they have a more holistic view with both the calculation engine and the hub rather than having only calculation engine. Okay? Then you have the hub, so what we call the financial tool. It is obviously Oracle and SAP started being there. I mentioned Aptitude, there is Anaplan, there are there are Moody's, there are SAS, there are lots of other players in the market. I just described some of them because it's what I see from Asia, Canada, and even Europe side, where what is really getting lots of traction in the market. In terms of report analytical, again, same player. I added a few more, only because some of the, I'm not going to details, but some of the tools, they only focus on the middle part, the real subledger. So they are more specialist than generalist. Others try to cover the end-to-end. So they will have a data layer that can help you, and they have a reporting layer, which is one of the components you want to have in terms of visualize the data. It doesn't mean the others they don't have, but it's very basic. Some of them are more refined, or they use Tableau as external additional layer. This part is more RPA. So I'm sure that everyone knows about robotics nowadays. So it's the big topic in the last 10, 15 years. It's not specifically IFRS 17 related. Is anyone clear about RPA, robotics? Yeah? Anyone doesn't know what it is? No? So robotics is basically a bot. So it's not a robot, but a bot that replicates certain activities in your organization instead of a person. Typically, it's a high volume and very repetitive tasks. So the big difference from RPA, robotics, and AI, artificial intelligence, is there is obviously a brain, so it can do tasks that predict what you think it will happen, while robotics just tell me to go from A to B, I will do it. Fixed assets, account payable, account receivable, typical activities in finance that will be used for bots, because they are high, invoices, very high volume, many companies, and then repetitive tasks. So it's not IFRS 17 related, but it can help you in the journey or automate some of the aspects of your readiness. Data is one of the biggest, obviously, topic on IFRS 17. We all focus on systems. I'm a system person. Reality is, the American says, garbage in, garbage out. Reality is, if you don't have a right level of data, when I say right level, it means the granularity of data, quality of data, you invested the money there, that will be a problem. Because when you start doing IFRS 17, all the problems will come up, whatever system you use. I will talk about data a little bit more later. one of the possible solutions that I would like to highlight, which is very innovative, like RPA, is something that we know, it's not a Deloitte thing, it's everyone, but it is in the market. It's actually a new kind of topic, hot topic, is called data fabric. So one of the components of readiness is the data is in the right state. So lots of people spend lots of money in what we call EDW, DW, data warehouse, data storage, whatever you want to call it. Now, that per se will cost you as much or almost as much as an IFRS 17 implementation. So one alternative view to improve that data quality is you have a source, your normal source on the left, and then this data fabric, imagine like a layer, like a virtualization aspect, layer. So you put this fabric, and then what you do, you point all your data, you transfer all the data in data fabric for once only, rather than every time moving data across. And once you are in the data fabric layer, you point on the data fabric like a virtualization. So you point but don't move the data physically. You just point and retrieve data. And you see on the left, I'm not going into the details, all your cost, that 40%, this Gartner is not us, there is a 40% reduction in cost of time. If you want to know more about this, do not ask me. Kylie will tell you. She's the expert on that. OK, I put you on the spot. So in terms of readiness, so if you follow me again in the story, in the journey, so we've done the impact assessment. We decided we want to go for a new system that will help us improving our information layer. Now, I look at what is in the market. I did the vendor selection. I think there are two tools the vendors telling me they're really good. I see that within my ecosystem, they fit very well. Everything goes well, but I'm not sure about how does it really work. The vendors will tell you that everything works perfectly. They tell you the moon. They are fantastic, like consultants. And it's not what you want. So what I will highly recommend is to do a proof of concept. So proof of concept means you select, I will say no more than two. Choose vendors. Actually, the vendors, there's no vendors here, I think, in the room, correct? OK, so they come for free. Don't share the information, because they will invest. For them, it's a big investment. They will basically invest 4, 6, 8, 12 weeks in going with you, and you give the data, or they provide the data. This is debatable how you want to play the data component. But in reality, what you do, you simulate what will be the implementation. So it's a small-scale implementation for a few weeks that will help you not understand if they can calculate the CSM, not understand if they do the reporting, because everyone can do, all the vendors I mentioned. It's more understanding for you what it needs to get there. So it's not the end result that you want to see. The number will come up. It's how they get to that result. Because every vendor will get to your risk adjustment in a different way. And you need to understand what means for you that different way. How much you need to give your data, how much is, you need to give in terms of resources as well. So a proof of concept is definitely something that will help you flush out some of the issues, even from a data component, beforehand rather than start the implementation. So it saves you, in reality, money and time. Another aspect that I found very interesting about the POC is that you work with the vendors. So there is a human aspect to understand, do I want to work with these people? Because these people will be with you until 2022 probably, even beyond. So you want to make sure that you bring someone that, again, from a resource type, from a human capital aspect, it fits with the organization as well, and the way of working. We've done a few POCs. The biggest one, obviously, has been with AMP here in Australia. We was very extensive, so we did like 12 weeks. It was almost a pilot, very training, but it was very useful in terms of understanding from a data perspective what is needed, from a skills perspective what is needed. I remember one of the things that came up very, very quickly was we were looking at data people. You need data people, but you need people who know insurance, understanding your business. It's not a pure data techie person that come there to fix you, help you with the journey. You need someone that understands actuarial data. You need someone that understands your insurance company. So this is just a slide that summarize the different components that we flash out. From an accounting policy, we realize where we were in the journey with our client. You understand the actuarial requirements. How does it work? How it's interesting because everyone in the journey of IFRS 17 realize how actuaries, accounting people think differently. There is I think one of the very interesting point of IFRS 17 is that in a way forces you, like it was a Solvency II in Europe, or Logic, I think here, it forces you as an organization to have the actuaries and accounting people working together, which is a different mindset. There is no silo anymore component. The source of data will eventually be the same, so it forces you to start cooperating, collaborating, working together, and in a way, go towards each other. So the actuaries start understanding the concept of accounting, debit and credit, and the accounting people try, because it's very complex, to understand how the actuaries think and operate. Do we have any actuaries here? Oh. So I have a very funny story, because I'm Sicilian. No, there are lots of stories, but I think the actuaries know this story. Because I'm Sicilian, I have a very good friend of mine in London who is an actuary for KPMG, who was telling me last summer, he came to Sicily for a holiday with me, and he told me, Kico, do you know what's the difference between a typical actuary and the Sicilian actuary? I said, no, I don't know. Why there is a difference? Well, a typical actuary will tell you, will predict the probability of when you're going to die. I say, well, I know that, especially in life. So what about Sicilian actuary? Well, Sicilian actuary will tell you not when, but who was going to kill you, why, and where. When you've seen The Godfather, you know what I'm referring to. So if I move from readiness, so again, the journey. So we did the impact assessment. We are now, we went with the vendor. We did the POC. So we are ready to go. So we select our vendors. OK, this is the one we want to work with. Then what do? We start implementing. So we need to define what do I need to implement a project. Now, this view is, I love this view because it scares also my client, because basically it's telling you, oh, I should have started 1 year ago. So I'm just, I'm halfway, I haven't done much. But the reality is you don't need this scale of timing. As I say, the timing is all personally customized to every organization. But whatever type of organization you are, you definitely need all these elements that are listed on the left in terms of policy, obviously. We discussed before all the accounting aspects of the policy. You need data component, crucial. You need the actuarial models to be involved in the project. You need accounting systems. Now, we call training, and we have a session later on about change management. We'll talk later with Sue when we go into the skills component. But I will say change management is a typical underestimated area, because people think that the change management is, at the end, we see what the impact on my people, and then I will train them. That's all. Completely wrong. First of all, change management is not only people. It's processes. You are changing your processes. If you are putting a new system, it means people will work in a different way. So the process will change. Obviously, the system will change, and the data will change. So all the 4 pillars of data, system, people, and processes will have an impact. So you need to foresee and then prepare that journey. We're having a change management person or team well early in time in the project, not at the end. Transition, obviously, we talk about transition, a big aspect, and then reporting. So there's one thing is not called out specifically on this slide, but we are realizing very quickly how important it is, which is a chart of account. So chart of account is something that, because introduced IFRS 17 as subledger, is something that you need to very quickly focus on, because it will impact not only in your subledger, but also when you split all the data towards the ledger. So how do you synchronize the ledger and the subledger is very important under an IFRS 17 view. This is even more detailed view. I don't want to spend much time. It's something that it's a little bit of IP, but I'm happy to share because it's generic. But it's generic in a way that gives you an idea of what needs to be on the detail level needed, what is needed for IFRS 17. Just a view to say all these components, what does in detail every single aspect of it. Do you have any questions so far? Does anything catch your mind or any burning question? Okay. Cost. You can't answer this question. No one in front on the audience. The cost can vary a lot. So we have organizations that were very low in cost, very, very low, like a few millions, a couple of millions, maybe a little bit more. But they spend 100 million before on all the data infrastructure. So giving you a number is like giving you a timeline. The only thing I know that I need to finish, because it's a regulatory compliant type of work, I need to finish by 1st of January 2022. What is in between is the way you structure your project. This afternoon we'll talk a little bit more about how the governance and skills that are needed for a project. So I'm not mean to be rude, but it's the reality. Now you can go even 50 million, or even more. More questions? Okay, this is, as I said at the beginning, this is really the end of the road. So one of the important things that I will like you to focus, obviously, is too early. But once you finish the journey implementing IFRS 17, there is the after. So yes, you need the accounting policy. Yes, you need the actuaries. Yes, you need the data. You need the system. But I think there is a component of target operating model processes, future state processes that you need to take into account. Because you will have an operational company will be different from what is today. So the aspect of understanding or start in the journey of seeing how you're structuring your organization in the future is very relevant. Because again, you're going to work in a different way. One thing that I always say to my clients is you can use IFRS 17 as a regulatory compliant. It's actually to the question about money. You can use IFRS 17 with a pure compliant exercise. Tick the box, say you're happy. Everyone is happy, the regulator is happy, your board is happy. I think it's a real waste to say I spent 3, 10, 20, 50 million, and what I get is only a compliance exercise. I would say spend a little bit more. In the beginning of your IFRS 17 journey with your executive stakeholders, think of the strategy, think where you want to go as an organization, because this is a way you can use IFRS 17 as an opportunity to actually drive a better return on investment, to better drive your business, to better understanding where you want to go and what you will be tomorrow. So rather than do a tick box exercise, and again, depending where you are on your journey, maybe you already done the strategy, you're in a different path, it's not your priority, you are having complexity. We see, we tell more about, you might have a new buyer, you have a new general ledger, you have another project that is so important that IFRS 17 can be literally the minimum value proposition, MVP, and no more. But if you have an opportunity to improve your business by using IFRS 17 as a catalyst, I think that would be the best outcome you can get. Okay. Any more questions? Okay, then I'd like to do a little bit of a more interactive session with you. I know that I'm the person between your lunch, so I'm the person between now and your lunch. So I will make this a little bit more interactive. Does anyone know Mentimeter? Can you please get your phone? Can you go to a website called menti.com? Once you get to the website, can you please put the 4-digit number on the top? People are starting voting. OK, perfect. So real-time voting. So the question is, what will be the impact of IFRS 17 within your organization? So what I just said, do you see it as a compliance only? Is it a transformation? Is both? Wow, lots of compliance. I never get this result. OK, while you're voting, can I ask, is there anyone who is brave that would like to say something about what they're doing? Without going into details, but something about your organization, why you are compliant, why you're transformation, why you're both? No? OK. So this is normally not what I was expecting to see, to be honest. Normally, we get lots of transformation, quite both, but very, very low compliance. So interesting. OK. Can we move to the next question, please? So the other thing I would like to ask you is, where you are. So I assumed in the beginning that you all done impact assessment. But where are you actually, now that I've explained the 5 phases, where you are at? Oh, none above. What do you mean? You haven't started? I need to know these 4 people. I need to put on the spot. So without telling me too much, is one of the 4 people saying that you haven't started at all? This is none or above? God, this audience doesn't want to talk. My God, did that scare you because I'm Sicilian? OK. That is, yeah, OK. Interesting. Again, this is different from what I normally get in terms of answers. So I get a very low impact assessment, a very high, normally the focus in feasibility and readiness. We actually have 9 people on delivery, so quite advanced. Wow. Wow, very good. OK. Can we get the last question? So does the organization have a plan for technology design? There is none of the above, by the way, as an answer. Well, guys, you surprised me. 22 people saying existing technology. Wow. Did I go to the right forum? Are you guys sure? I'm in the wrong room. Fantastic. So thank you. This was just having, it's a completely anonymous, so it's just having an idea of the where you guys are in your journey, because I think it would be interesting also when we do the session after lunch to maybe direct more the discussion around where you are at and what it really means for you. So before thanking you for the time you dedicate to me, I just would like to leave you with the, if anything you remember, I'm sure you will remember that I'm not Japanese, that I'm Sicilian, and then I'm not an actuary, but Sicilian actually are different. But what I like you reality remember of this few minutes together is one that use IFRS 17 as an opportunity, not a threat. It's complex, it's painful, but it can be fascinating. Difficult to find it, but try. Second is data technology is a big component. Obviously the accounting policy is important. You go in that aspect, the actuarial component, but data technology will really help you to be successful. Third is my segue for the next session, resource. Resource is a big component of IFRS 17. Why? After lunch. Thank you.